The run-up that TCDA had just a few days ago could have been a massive bull trap, and that bull trap could actually still be in play. Let's go ahead and find out exactly what that means. What is up, you guys? This is ARCa coming at you with a TCDA technicals and raw price action thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community, ARCab, in Discord. With that said, let's go ahead and dive right into the charts. So we are looking at TCDA on the 6-hour chart right here, and we are setting the stage potentially for a macro reversal here, but this or not a macro reversal, we can actually call it for a reversal of trend for now, right? So, but this is actually going to take some time. Since we're on the 6-hour chart here, you can actually gauge some timing just by looking at the beginning of the channel to where we are presently, and you can see that that has led to about 25 days from this point to this point. We are in test number 1, and usually these descending channels present 3 tests before large capitulation. I'm sorry, and then following a true attempt at breakout on test number 4. So here, this could likely take some time. Now, the reason why I'm saying that there is potentially a continuation of a bull trap here is because there was a lot of liquidity here that was gathered in hopes that this was going to reverse entirely to the upside, but it is following a trend here, and the likelihood of coming down to these areas down here first are very high, or they're likely. So judging on price action here, this candle usually would signal a potential upside or a reversal from this current downside, right? But I would usually like to see a lower wick down to get a further upside continuation. But this hammer looks a little weak, so this could also be a potential, I don't want to call it trap, but it could also be kind of like trickery, right? So that you can gain a little bit more liquidity and then short positions open for the downside here. Another thing too that could be trapping some longs is the fact that we could be printing an inverse head and shoulders. I usually don't like these formations, to be very honest with you. I just have to present them to you because they do have a psychological factor applied to them, or a component, right? So we have to at least identify the potentials or the probabilities of uneducated retail trading on signals like this, not seeing the fact that we're in a trend and thinking that we can long here and just go to the moon. So there is this in play that can also give some retail, or get some retail fooled, right? So let's go ahead and move on to the next. Oh, actually, one more thing here. If we did start our descent from this area here, we can actually see a drop to what could be the 1.618 at about 20 cents, 20.72. So that could likely be an area for us to touch first. The reason why I had this here is because upon first sight, or just I prepare these charts in a very, very discretionary manner and very lightly before I actually talk, which is usually the process of how I trade, right? So I was thinking that this could have been a bull trap area here. So if a FOMO event triggers and then it just goes up, this can potentially wick here to about the 1.618 at 27 cents, 27.17, before finding a massive trap here, and just short positions would open and just pressure the price to the downside. I usually don't like to call bull traps or bear traps within a smaller time frame. I would like usually to see at least 12-hour and up for an actual bull trap situation or bear trap. This is too short of a time, but it looks like there could have been a liquidity trap here. So now let's go ahead and move on to the next chart now. Okay, so this is in a smaller time frame. We were in a 6-hour here. Let's just go ahead and look at particularly, I just want to show you exactly where this is. Okay, so in a 4-hour time frame, I want to show you also the different possibilities of what we could be forming here. Okay, because in this case, yes, this is a bullish. This is definitely a bullish formation, and it does have a reversal to it eventually after 4 tests. So in this case, this is the same area that we're looking at on the channel, except in a different perspective. This is a broadening descending wedge, and it was actually very close to being a right-angled broadening descending wedge, but the trend line was actually a little too it was too high for these candles here. But since they were so spot on here, it gave me the feeling that we were in a sense. I mean, we probably are. It's hard to. They're both bullish, since this candle touches here, and we have these two as resistance. I can actually probably just call this for sure a right-angled broadening descending wedge, and it does have a range for us to trade, and a lot of the times these can actually pan out to the downside or to the upside. The descending broadening wedge is actually a full-on reversal signal, and it shows to the upside. I can call this a right angle just because of these candles, right? Being they're touching so nicely here. The reason why I couldn't call it that is potentially because this candle here can be touched like this with these two to create now a bullish setup, since this one is a bullish setup. Okay, but we're in the very early stages of this to be able to call this a descending channel, but it is forming very nicely, and it's following the trend exactly like one would. So in this case, I'm not gonna lie, this is a little difficult for me to see, but the number 2 test just happened within this formation, and usually test number 2 and test number 3 usually signal short positions to open up for a long trade to the. I mean, I'm talking about. I didn't mean by long as in buy. I meant by distance, like a huge distance of downside here for a massive downside trade, potentially to the 1.618 at 20.37 and the 2.618 at 17 cents. These could be likely targets that can be reached before an upside continuation, test 3, and then really come back down and capitulate to this area here. This is highly risky, and this shows a lot of nervousness. Another thing is that what happened here, what is this? Was this a reverse stock split? I don't understand why this happened here. But yeah, if you guys can let me know down in the comments below, that'd be great. I actually don't follow fundamental analysis whatsoever. Okay, so now let's move on to the next chart here. So because I'm having trouble seeing the potentials of the formations within the price action here, I'm going to use the Crypstex ARC-Series indicators so that I can be able to gauge a bias for direction, at least in the medium term time frame, or I'm sorry, the immediate short term time frame hourly here. So this is an indicator that's very special. It is comprised of several exponential moving averages. They're placed very close to each other from a little bit of a wider time frame to a very tight, fast time frame, so that we can be able to gauge the momentum or the wave of direction for the pricing for the price action of the asset. So for example here, and it does give you a buy and sell signal. So we have a long signal, it takes you up, give you a short signal here, takes you down, give you a long signal here, came up, and now we're actually looking at a short position here, and it hasn't recovered yet. Also, the enhanced MACD, the ARC enhanced MACD, is also showing us a bear signal here, or a sell signal. So these two can be used together as well. Now, if you take a look at the cursor line here, you can see that the bear signal fired off at this candle here, and actually the ARC armor fired off right here. So this could be a further validation, or the armor could be a further validation that downside is imminent, or it's coming, or it's on its way, right? So this is a good validator for your thesis, and this is me forward testing it. I have it up because this is a request that actually came in yesterday and then early this morning. So TCDA is looking a little shaky for now, you guys. Okay, so please be safe with this asset, and definitely watch your longs. Definitely, maybe if please know that I'm not a financial advisor. Okay, take whatever I do show and iterate within these videos as a form of entertainment. I can't actually suggest for you to buy or sell any assets. Do your DD and we'll be okay. All right. So now I want to just share with you that if it does continue going against your favor of direction, scale out. Try to remove risk from this as you go down if you feel compelled to stay long in the asset. Okay, but usually when it comes down to around 10% or 15% my entry, I'm usually out. Okay, so at this point, if you feel compelled that it is going to go up, to the upside based on fundamental catalyst coming up, then scale out. If you're long at this position and it goes down to here, trigger a 30% down here. Trigger a 30% stop loss, remove 30% of your risk, wait for it to continue to a relevant support area, and use the 30% down here so that you can then bring this cost basis down to a lower level, thus making it easier for you to reach from this area now to this area rather than the very top. Okay, so that's kind of a strategy that can be done for long positions losing. Okay, so now let's just look at a quick thing for the RSI here. So for the new viewers, I actually do have a diagram here for you to follow. These are the 4 zones that I would like for you to look at, which are these 4 zones of the RSI right over here. Okay, so the immediate short-term time frame RSI, it's suggesting a continuation to the downside. However, I say this very often, but when we're in the very shallow areas of either zone, we are likely to come back up temporarily and find potentially some resistance from this pink line, which represents the moving average from the RSI in a 14-day period. So there is the likelihood of finding some sideways trading here in the immediate short term, right? Bi-hourly. Sorry, you guys, that caught me by surprise. Bi-hourly is suggesting some sideways trading as well here. So, yeah, in this case, I wouldn't give this too much credit right now. So definitely don't. When we're getting this neutral bias and direction, it's not giving you any suggestion for that direction. So in the 6-hour time frame, we are looking like we're about to make a bearish cross. The RSI signal is going to make a bearish cross below the moving average, which usually signals a continuation to the downside. We do, for the short positions at least, we do want to continue down to this area into the grips of the bear strength percentile to continue on a descent. But as long as we are within this area, there is risk for upside here. But this is, I mean, just know that we are in the second level of the bearish control zone. Sorry. Okay, now this is just very, very, very ugly. The daily is not giving us any bias for direction. So when I get these types of signals, this is when I pair it with, this is when I bring in the Crypstex indicator so that I can be able to see what these indicators are suggesting for direction. So they are suggesting a downside, and it is in accordance to what I was speaking about within these charts and the potential bear trap that's still being bull trap, sorry, still being at play. So I think this is a pretty good place for me to leave off the video. If you have any questions or concerns, please don't hesitate to reach out to me. I'll make sure to leave the links in the description below for you to consider joining the ARCa trading community in Discord. But with that said, I wish you well, a very good night, and I will catch you at the bell mañana. Adios.